Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is Guy Young, the founder of Ethena Labs. Ethena Labs is the team behind the Ethena protocol, which is building a synthetic stablecoin dollar USDe, which at the time of recording had a market cap of over 3.5 billion and a 24-hour volume of 44 million. And this is all since it launched in mid-February. The company is backed by Dragonfly, Binance Labs, OKX Ventures, Galaxy Ventures, and prominent angel investors, including Avara's founder, Stani Kulikov. Earlier this year, its TVL surpassed $2 billion, and the company is currently expanding its roadmap and token capabilities after the token launch in early April. With that said, there's a lot to discuss here. Guy, welcome to the show.
Yeah, thanks for having me on.
Yeah. To start, can you kind of tell us a little bit about yourself and how you found yourself in the crypto space? And then we'll go into Ethena Labs and everything else.
Yeah, sure. So I wasn't that early actually to crypto. I got introduced in the back end of 2019. I had a friend who's a DeFi founder, and he introduced me to Ethereum, all the applications being built on there. And it was just something that I was really interested in on the side of my day job. So what I was doing day to day was working in a hedge fund, which is based in New York. They looked at primarily financial services, so investing across the capital structure into banks, insurance companies, specialty finance, and that was both like liquid and illiquid type of opportunities. Was doing basically just interested in DeFi and investing into it on in a personal capacity on the side of my day job, basically until Luna collapsed in 2022, and Arthur Hayes came out with a thought piece where he described his vision for a crypto native synthetic dollar. And I read his blog post, was quite inspired by the idea and resigned from my job to start doing what we're doing with Ethena.
And so that's why you created Ethena Labs, because you saw this post and you wanted to create a synthetic dollar, essentially. Yeah,
it had been an idea that I've been, it's a concept that people have been thinking about for a long while. He just sort of came out and expressed an interest in basically supporting a team that would actually come out and execute on it. And it had been something that I'd been thinking about for probably 6 to 12 months before he actually came out with it. And it just felt like one of those callings when I saw that, and sort of having that urge and desire to go do it. It just felt like sort of the right time to jump out and do it.
Mm-hmm. And how did you kind of approach it to start? Like when looking at it, obviously it's a very daunting task to do that. How do you kind of look at that and say, okay, I'm going to be able to do this, especially coming from like a traditional finance world? I know you were doing DeFi crypto stuff on the side, but what made you, or I guess, how did you go about it?
Yeah, I think, it's a funny experience because I've never actually been through something like this myself. The most number of people I've managed in my prior role was like 2 people in a small team. So actually managing an entire team and business was a completely new experience to me. And to be completely transparent, it is like a daunting task as you're sort of rolling through it, where I think a lot of founders don't speak about a level of like imposter syndrome as you sort of go through the whole thing, where you have this outward image that everyone has expectations around you and I guess the level that your business is at, while the truth of every startup is that you're sort of always trading a little bit behind your public image and where you actually are. So I think a lot of it sort of comes down to 2 pieces. One is just having like blind, I would say like naive views on your own ability to actually go and execute on it. Like obviously the vast majority of startups or like new ideas don't work. And I think you just have to have like almost an irrational sort of belief in your own idea to sort of like go ahead despite like there being bad odds. And then I think the second one is actually, it's a funny one, but where I think there's like actually an element of arrogance that actually exists within any sort of idea or startup, which is like you have a different view of the world as it exists right now, and the world does not sort of agree with your view, or else it wouldn't be an interesting idea to go and pursue. And I think you have to have a little bit of that in the beginning to sort of ignore people who don't think that it's a good idea and sort of push ahead with it.
I like that. I haven't thought about it like that as a founder myself, but on the front of that, were there people pushing back against you when you were like coming out with this idea, or the company itself?
Yeah, 100%. I mean, you might have seen some of the comments just on Twitter when we sort of came out originally with the product idea. It was a very divisive product, I'd say, and it really split a lot of people's opinion, where a lot of people had a view that, yes, it's an important product that should exist. And then some people obviously had flashbacks to things that didn't go that well last cycle. So I think part of the issue here is that we're obviously trying to do new and innovative things around a subject that is quite touchy, i.e. The two biggest disasters that we saw last cycle were Terra Luna blowing up and then the fraud within FTX. And I came and said, can we try a new stable asset design, which sort of gave people flashbacks to Luna, but then also touched centralized infrastructure. So in many ways, it was the most insane thing that you could actually approach people and say at the bottom of the bear market in 22 to say, like, you've just had these incredibly high profile disasters and we've got like a different take on how we consider it. So yes, absolutely. It was controversial like back then. It still is controversial now, but I think that that's part of what the opportunity was you have to go and actually do these things that people have sort of written off for that to be an interesting opportunity.
Yeah, I do remember kind of when Ethena Labs launched and everything, and there were some concerns about like the USDe stablecoin with the high yield, similarity to some other stablecoins that maybe didn't succeed long term. You mentioned Terra Luna, the whole collapse then. How do you kind of address those concerns and say, no, we're going to do it differently? And what are you doing differently?
Yeah, I think to me, it was actually quite strange to see the comparisons, because on a spectrum, if we look at the design space for stable assets, you have obviously the fiat stablecoins that everyone's familiar with, and then you've got like MakerDAO with over collateralized like CDP designs, and then you have Terra Luna, which was essentially like under collateralized and like fully algorithmic. The design of Ethena is, if we had like a scale of MakerDAO to Luna, MakerDAO being 1 and like Luna being 100, Athena's like a 3 on that scale in terms of how similar it actually is to Maker with just a few small adjustments. The key bit to like recognize here, which is what is actually different, is the key question I think always with these things is like, what is actually the collateral that's backing the stable asset? And the key sort of fault within Luna was it was its own governance token or equity-like instrument that actually backed the stable asset. Within the Ethena system, there is zero role that the Ethena governance token plays within the system. It's fully collateralized by ETH and Bitcoin with corresponding short positions that sit against it. So you can sort of think about it as, even if there was no governance token attached to Ethena, the product would still exist and would still do completely fine. If the Ethena governance token went to zero tomorrow, it would have zero impact on like the backing behind USDe. And that was actually really the problem with Luna, which was it was a very self-referential system, which had the ongoing assumption that the Luna token itself would sort of have go forward value.
Mm-hmm. And for our listeners who aren't familiar with your stablecoin, what is it backed by? I also know Ethena announced plans to integrate Bitcoin as a backing for it as an asset. How would that work? How is that different, et cetera?
Yeah. So at a very basic level, what's happening is you're taking a form of crypto collateral. So that can be ETH, Bitcoin, Solana, whatever it is. And then you're executing a delta hedge against that collateral. And what that means is you're taking out a short position at the same notional size as the collateral that you put down. So as a very basic example, you put down $100 of ETH, and then you take out $100 ETH short. And what's interesting about that is that the price movement of ETH now has no impact on like the net result, right? Because if ETH price goes up by 10%, each side of that sort of leg of that transaction offsets one another. And so that's why it's called like a synthetic dollar, where you can actually represent those two positions offsetting each other as a dollar-like position. So at the moment, well, we started initially with just ETH, and then as we grew, we became a pretty significant size of the sort of futures and derivative market that's associated with ETH, and expanded to Bitcoin sort of late April. And since then, I've added around $1 billion of BTC collateral that actually sits within Ethena. So you can really think about it as just a big pool of BTC and ETH, and a big pool of BTC and ETH shorts that sit on the other side to offset that.
Mm-hmm. And how would it kind of maintain that neutral strategy, or I think you said delta neutral, during like market cycles and volatility? Is it because the volume is so large? Yeah, I'm not highly technical on this. That's why I'm asking.
Yeah, no, it's a perfectly fair question. So the basic idea here is that like even if the ETH price fell like 90%, the spot side of that transaction, i.e. your ETH collateral, would be down 90%. But because you're short ETH on the other side, that's going to be up 90% on the other side. And so those two things set off one another. And if you close that position, you're sort of there back to $1. And so that's the basic idea, which is it's it does not matter what's happening with price movements within the market. You always have a dollar that's sort of represented there by those two positions netting off.
Mm-hmm. What are your concerns with this? I mean, it sounds like you have it figured out, but are there things that you feel like we have to just see to pan it out?
Yeah, I think there's probably a couple. There's one, which is custodial risk, and this always exists with any asset that lives outside of DeFi. So, I mean, if we just look back to what happened with USDC and SVB, if you remember at the beginning of 23, everyone sort of viewed USDC as essentially risk-free. And I think what we learned that weekend was that it's not risk-free. There was actually a risk of holding your assets underneath. So that risk still exists here, but essentially what Ethena's done is take T-bills and collateral in the real world in the normal banking system and moved it into the crypto ecosystem. And so you're now holding crypto with custodians in the crypto ecosystem rather than like banks in the real world. That obviously presents a risk if custodians lose the assets and there's like an issue with that. And that does happen every now and then. But it's something that's quite difficult to avoid where, you know, as I said, these sort of issues happen with even like entities like USDC. And then equally, if you're leaving like your assets in a smart contract, you see these hacks all the time. So this sort of exists everywhere. And that's fundamentally the biggest risk with Ethena, which is, are these institutional qualified custodians doing their job right and actually holding the assets correctly? So I view it as a relatively low risk that they would sort of mess that up, but we can't sort of discount it entirely. The second one is just what might be the second order impact of like Ethena becoming extremely large in the market, where you haven't actually had an entity that has this much contribution to the derivative market overall. So obviously there's a lot of people who do what Athena's doing right now, and they have been doing it for the last 10 years, but they haven't done it at quite the scale that Athena's doing right now. And that's just really a question of how we need to actually just see how these things play out through market cycles. So I'm sort of the view that you never want to actually push the growth too hard in like the first cycle that you do exist. And I think that we as a team have been pretty explicit in the way that we roll this out. While despite the fact that we have been growing quickly, we've been doing a bunch of different things to try and do that in a slow and measured way. And I think a big piece of this is actually just saying through the market cycle, when you have an entity that contributes this much to the derivative market, are there sort of like second order unintended sort of consequences that we haven't sort of fully appreciated now?
Right. And so USDe is backed by Bitcoin, Ethereum. Do you see other crypto assets backing it in the long term?
Yeah, so I think Solana's going to be coming pretty soon for us. The question is just, is the derivative market around that asset big enough to make it worth a while? So at the moment, Solana is sort of on the cusp there, where I'd say it's around $3 billion of derivative open interest that sits there, which means that we could contribute somewhere between, call it $500 to $1 billion on Solana. That's sort of at the level where I think it makes sense for us to do the engineering work to sort of add it as an asset. So yeah, I wouldn't discount anything. It just has to meet sort of a minimum threshold of size that I think makes sense for us.
Okay. So it's not based off like preference or longevity of an asset, more like the size of the derivatives market.
Yeah, and I think that those two things do come hand in hand a little bit, which is like once assets have been through multiple cycles and that kind of stuff, people get a bit more comfortable, building deeper markets around them. And so like even Solana last cycle, even though the price and the market cap were sort of equivalent to where you see it at the peaks of the cycle, the market hadn't sort of caught up in the same way. And I think that's exactly what you see when assets have been through multiple cycles and stress tests, that they have the confidence to sort of build that later on.
What kind of role do you want Ethena's USD to play in exchanges? I know recently BitGet announced it was using it as collateral for perpetual futures. Are there other exchanges in the works that you're working with, and how do you kind of see that panning out?
Yeah, it's a really good question, because I think a lot of people actually ignore CeFi and centralized exchanges as a huge distribution channel.
Not the normies, but yes.
Yeah, it's 100%. But like builders who are existing in crypto sort of see it sometimes as just this like ugly duckling on the side that they just want to ignore. But like the fact of the matter is that they have like 200 million users when there's maybe a million that are actually sitting there on chain. So it's actually been quite intentional from the beginning of Ethena. I think you called out in the beginning, I think we're the first project that had every major centralized exchange invest into us. And part of the reason and the vision behind that is we want to be neutral infrastructure for all of these exchanges to be using USDe as an asset. If we just look back through the history of what are the success stories of stable-like issuers doing well, it's always been tied between an issuer and an exchange forming an alliance. So that could be Circle and Coinbase, Bitfinex and Tether. Those two things always come hand in hand. So yeah, we have BitGet, Bybit. You can also put down USDe as collateral to trade perps. The reason this is such a fundamentally interesting idea, and I think that the market is still underestimating how big of an idea it is there's around $25 billion of dollar margined futures within crypto, i.e. there's $25 billion of Tether, which is sitting there, and the only purpose of it is to margin perpetuals. And what's interesting about that is you're foregoing what is essentially like a 15 to 30%-ish yield that you could be producing on USDe on the collateral side. And so when you take this to traders who understand the product, who understand the risks, and have been doing this their entire lives in terms of the underlying mechanics of USDe, it's extremely compelling to them to actually say, instead of earning zero on their collateral while you're trading, you can actually earn those interest rates that I was describing. And we think that that's like a fundamental change in the industry going forward, which is an ability to recapture some of that return from that traders would be bleeding normally.
And where would the yield come from again?
It's essentially like the shorts that you're putting on against the collateral. You can think about it as participants within crypto generally are massively biased long, i.e. They think the market's going up and they want to be levered long as the market does go up, but there's not enough capital being supplied into the system, and that makes the interest rates quite high to say, if you want to get leverage and go long, I'm going to have to charge you quite a high interest rate to do that. And so Ethena is really just on the other side. You can think about it in a different term, which is the participants who want to be levered long on the other side. Ethena is basically just providing capital to say, I'll take the other side of your trade and you're going to pay me an interest rate to do so. And those interest rates tend to be pretty high when the market's moving a lot because there's just not enough capital within the system, essentially.
Yeah. On the conversation of centralized exchanges versus decentralized exchanges, I feel like DeFi users would definitely understand this better than centralized users. How do you kind of educate and engage people on that side of the spectrum? This podcast is sponsored by Galaxy. And if you're immersed in the world of Web3, Galaxy is a name you need to know. As a decentralized super app with an impressive 21 million users boasting over 100 million monthly transactions, Galaxy is elevating its impact with Gravity, the magnet chain for Web3. Gravity is designed for full chain abstraction, zero knowledge proof-based privacy, and rapid transaction speeds, all coming together to offer an unparalleled user experience. Gravity opens the door for developers to effortlessly build on the largest on-chain distribution platform, and for users, it promises an even smoother, more secure journey through Web3. It's not about being on-chain, it's about being on the right chain every single time. Galaxy is on a mission to onboard the world to Web3, and Gravity is the magnetic force that will propel that vision forward. Ready to launch your Web3 journey? Build the future on Gravity. Visit gravity.xyz for more information.
Yeah, it's interesting. I think the product is actually, I think, catered for both sides of the market in an interesting way. So like when we rolled out initially, it was all of these sort of points program and farming and stuff that you see on chain. And that was like the initial step that we took. The interesting piece though is that a lot of the people who trade on CeFi have been doing this exact same cash and carry type trade for the last 10 years. So they really do understand like the underlying risks and how it sort of performs through multiple various cycles. And so really we see it as two different user bases. One who's a bit more degenerate sitting on chain, trying to do like weird, interesting things with different DeFi apps, composing USD into like leverage platforms, all that kind of stuff. And then the guys on CeFi are actually just a bit more focused on using it as collateral to trade perps and just collect a pretty basic interest rate that sits there. And so for us, it was probably actually a bit more of an education process for the people within DeFi who had less sort of experience actually doing the trade on CeFi. I think for us, we're just trying to cater to both sides of those markets.
That's interesting that I thought it would be the other way around. Yeah. I mentioned in the intro that earlier this year, Ethena's TVL surpassed $2 billion. That's pretty impressive for, a protocol that launched recently. What do you kind of think drove that metric?
Yeah, I think I'll put my hand up and like recognize a huge piece of it was like luck. I think just with the market sort of dynamics that were sitting around us. So at the beginning of the year, the funding rate, which is that interest rate that I described to you for being short on these exchanges, it was in the range of like 30 to 70% for multiple weeks on end. And so it's not actually that difficult to sell a product that's paying 30 to 70% like real yield. That's kind of like
above it.
Yeah. And so I think, obviously the team did a reasonable job like getting in place and ready for when the market cycle did turn like that so that we could like move into it aggressively. But I think that there has to be a big recognition that there was a huge like factor of luck in terms of the market sort of timing as to why we could grow that quickly.
What's the lockup period for something like that? Like for your yield?
Yeah, so at the moment there's like a 7-day withdrawal period on the asset, but you do have an ability if you want to just swap out of it in like an AMM in Curve or something like that. Sometimes that does cause like small dislocations in the price of the staked asset. So like it doesn't impact USDe itself, but it impacts SUSDe, where if someone doesn't want to wait for 7 days, they can swap out in a liquidity pool and take like a small haircut on that collateral. But at the moment it's around 7 days.
Okay. And then for the TGE or token generation event that you guys also had earlier this year alongside the USDe, there was an airdrop in early April. I'm curious, given that we kind of like, talk about tokens on this podcast, what made Ethena want to launch a token? What value does it provide? Kind of like, what's the utility behind it right now? And then maybe in the long term, where do you see it going?
Yeah, I think Ethena is a reasonably complex system actually in terms of what's sitting in the background. So a lot of the discussions that we're having around what is the composition that's actually sitting behind USDe, what proportions, what ratios, question marks around how much should like Ethena, the protocol, actually be capturing out of that interest rate that's being produced. So sometimes you want to be growing and capturing not too much. Sometimes you want to be actually capturing more of it. I think there's a lot of like complex moving pieces here, whether it's from like a risk perspective in terms of how the actual backing is constructed, or from a return perspective around how do you actually allocate all the cash flows that are actually being produced within the system. And so that's really like the role that we see the Ethena governance playing going forward, which is at the moment you can sort of like stake it, and we announced something quite interesting with a new restaking protocol coming out called Symbiotic. And the basic idea here is that the ETH token itself can be staked in a way that you can sort of conceptualize that's quite similar to like generalized insurance. So you're staking it to actually secure different pieces of the Ethena system. And if something sort of goes wrong, then that collateral can be slashed. But in return, there's sort of like a bit of inflation that's sort of paid to the ETH token for sitting in there. So yeah, I'd say it's sort of like deciding on what is the backing, the risk parameters, and how do you sort of control the value that's being generated within the system. And then the second piece is around this idea of different pieces of the system being secured by ETH, the asset, as sort of an insurance layer.
Ethena also put out its new tokenomics roadmap, I should say, recently for the ETH token, requiring holders to lock up about 50%, right? What was kind of the decision behind that? Is that kind of to secure the network? Is that common, you think, with other tokens?
Yeah, so this was like unvested amounts that was sitting there from people who got an airdrop that was still vesting from season 1. There was basically, it's more of like a realignment piece between the users who are already there. So the idea here is that for the guys who are locking and staking and sort of longer term participants within the system, the idea was that it's more of like a reallocation of economics between those who are sort of exiting early and the guys who are committed like longer term. So that was just the basic thinking there. It's more around, I guess, rewarding the guys who are more long term aligned within the system and just doing a bit of a reallocation there. And then the second piece of that announcement was that piece that I was mentioning there around the restaking and how that sort of fits into our broader vision for what we want to do with the chain and like the different elements that sort of exist within that.
Okay. And then on that note, in the beginning of this kind of like section, I asked about like, where do you see the token playing a role in the broader Ethena ecosystem long term? How do you kind of envision it maybe as like an asset class or the utility?
Yeah, so I think where we want to take this is like we view the asset that Ethena produces as a pretty important one within, I guess, DeFi and CeFi now as well, which is we want to create our own form of crypto native money, which we think is like one of the most powerful like apps and then products that you can actually produce. The idea then is that that is an important piece of the puzzle for different applications where a lot of the DeFi apps sort of like build and depend on having USDe. And so the thinking here is that if we can go and build an ecosystem around that asset and actually sort of drive new demand with financial applications using the asset, there's a bunch of different ways that like ETH can be staked to secure different elements of it. So the first example that we gave there was cross-chain messaging for sending USDe between like our new chain and different areas. At the moment, we're working with Layer 0 to sort of facilitate those cross-chain transfers. Sometimes that doesn't go perfectly fine, i.e. there's an issue in actually transferring the assets. And you'd have ETH there staked and then slashed if something does go wrong. So you can sort of think about it as like a safety layer that exists within the system. And that cross-chain messaging that I was giving you there is just one example of where it might fit in. There's a bunch of different areas where you might say, if something goes wrong within this level of the system, you're able to sort of like take the collateral and slash it. And in return, there's some sort of like yield that's sort of paid for the person who's providing that security.
Right. Okay. And then aside from, aside from what we've discussed, what else is on the roadmap for Ethena Labs, USDe, and ETH?
Yeah, I think one idea that we think is quite interesting is obviously at the moment, Ethena is like reasonably big at like 3.5 billion, but like there is scope for it to get quite a lot bigger. One interesting piece is around the backing for USDe, potentially being able to express that as something that looks a little bit like an exchange. So the backing is obviously full of BTC and ETH, like I described, and then perps that are sitting on the other side. Ethena always knows at any moment, I want to buy or sell spot or perps at level X and Y, which you can sort of express actually as like an order book or a pool of liquidity that someone can come and trade against, i.e. at a certain size, like Ethena actually starts to become as big as some of the centralized exchanges in terms of the inventory that's actually sitting there. And so there's really interesting ways that we can sort of take that inventory and actually start to turn it into something that looks a little bit like an exchange. And obviously the flows that Ethena sort of represents now within the market are some of the largest in terms of being like the largest flows now towards some of the biggest exchanges. And so there's an opportunity actually to help bootstrap new decentralized exchanges that exist on our network and on our chain to say Ethena is here to sort of like support the growth and can be on the other side of the trades to sort of bootstrap those exchanges. So we sort of view it in 3 different components. There's creating money, which is, I guess, the first product, the USDe. The second component is the chain or like the network. And then the third one is an exchange that sort of ties that all together.
On the front of the chain, what type of developers or projects do you really want building on Ethena? Is it more like DeFi or just finance driven in general? Or is it anything across the board? Do you see it as a generalist chain? I don't think you do.
No, not at all. And I think that this is like a bit of a problem that a lot of these chains get into, which is kind of like, hey, we're here to do gaming, finance, like all these things in one. And then you kind of never do one of those things really well. So I'm a very strong believer that you kind of need to actually focus in on what is your niche and what is like the area that you've actually a bit of an edge, and then make sure you're pushing that pretty hard. And so I think what we found is that, and just the speed with which Ethena's, I think, integrated with some of the most important like DeFi apps in the space, there's a recognition, I think, from the other applications that this is an important asset that they want to build and work with. And so, yeah, for us, it's all really building financial infrastructure that's sitting around USDe rather than some of the less relevant things like gaming and stuff. And before we kind of wrap up with everything, what would you say are like the 3 pillars that you want the business to become or be known for, let's say in like a couple of years, which is a long time in crypto, but let's go down the line. Yeah, I think one, like crypto native money, I guess, is like the guiding vision behind what we're doing. And I think that is, it sounds simple, but it's actually a pretty important thing to work towards. I think when there's like a bit of a meme of people talking about when the next billion users or whatever come to crypto, when we haven't even like got like.
I always say that. I'm always like, there's no next. It's the first billion.
Let's start with 10 maybe. But I think having said that, if we ask ourselves like, what is actually the product that could maybe appeal to 100 million people? It's probably going to be something that just looks like holding $1 in your wallet and getting a yield and sending it to your friends or spending it. I think we've seen like really interesting, I guess, bridges between crypto and like fintech type layers where like, I think that gap is actually closing and like seeing more merchants accepting stablecoins and that kind of stuff. Interesting things like Telegram coming into the market and actually bringing hundreds of millions of people to hold and touch sort of like a wallet. So I think the basic piece for us is actually, once you produce $1 that has a structurally higher return, which is kind of what Ethena's USDe is sort of producing right now, That's actually kind of enough to if you can start to get that in the hands of like people all over the world, that's kind of actually all I think that most people want out of crypto, which is just holding a dollar and getting yield. And so for us, I think it starts with crypto native money. Fundamentally, I think just useful product for most people in the world in terms of where would they find like use coming out of crypto. And yeah, I think that those are the main bits on our side.
Yeah, you kind of said like that's all that people want is that dollar with a structurally higher return. Do you see the yield getting more bigger, or is this kind of like the limit of where it's going to be?
Yeah, I think it massively fluctuates through the cycle. So when people are huge crypto bulls, like the interest rate will be high, and then when they're not, it's low. That's okay. Like all we're trying to do is, and I'm sure the yield's actually going to come down the bigger that we get, and that happens in any financial market. When capital flows into something, the returns and the interest rates come down. That's not negative. That's actually just Ethena doing its job by saying, we think that this return is too high. We need more capital to come in here and bring it down. And in the process of doing that, you're going to create a lot of value. So yeah, I do think in an end state, the interest rate is much lower, but that's sort of like a result of us doing our job and Ethena getting a lot bigger. And it's a market set interest rate, right? So people are just going to work out like what is that equilibrium where that interest rate makes sense relative to the risk. And all we're doing is sort of providing the plumbing for people to work that out.
And where does the yield stand right now?
17.5. Yeah, last week. Yeah.
Nice. Are you getting your yield?
I have an uncomfortable amount of my own personal portfolios in it, which
you got to believe in it. You are a part of it. 100%.
Yeah, there's a funny debate that I had with people where they were like, thinking, is it strange that I think you have that much like exposure to your own product? And I sort of said back to them, like, it would be a bit strange if I didn't, to be honest.
Yeah, if you don't believe in it, then that's a problem. I agree with you on that. I think, there's like two sides to it. People were like, oh, he owns too much, but I know what you mean. I understand that. Yeah. To wrap things up, Guy, one of the last questions I always ask my guests is, what are you watching in crypto right now that you think people should pay attention to, aside from everything we've talked about?
Yeah, I think, well, I guess one dynamic now, just in the public markets that we've sort of seen play out in the last few months is just around, I think, just the huge number of tokens that have been hitting the market and like at enormous valuations. And I think just like the forward valuation of how these things look. I think one piece that we've seen coming out this year is actually pretty wide dispersion between like BTC and ETH as assets and like institutional bids that come to find those assets via ETFs. And then I guess the rest of the market, which has essentially been bleeding against those two assets in significant ways. It does feel like it's getting to a slightly unhealthy sort of balance within the market of like, you just cannot absorb all of the supply that we're seeing from like these new projects and new ideas. And so I do think that there is still a bit of a cleansing process that sort of needs to happen, I think, in the next 12 to 24 months where we continue to see like that dispersion play out. And we sort of like need to reset, I think, where these other tokens are relative to like BTC and ETH valuations.
Okay. And do you think that applies across the board for tokens that have been around since previous cycles, or this is more so like the most recent cycle?
Yeah, I think it's more so this cycle. I mean, it's very difficult to categorize it all in total, but I think, just the amount and speed with which like new tokens have hit the market at relatively high valuations this year, it's just the simple math of like inflows and outflows looks quite difficult to sort of be able to absorb that in the next 24 months.
Yeah, that makes sense. Lastly, can you leave us with a piece of advice, maybe something you've carried with you through your time in the crypto sphere?
It's a difficult question. I don't know if I'm actually in a position to give anyone advice, but I think
not financial advice, of course. Yeah.
Definitely not financial advice. Just helpful advice, I guess, was something I guess I've learned going through this experience is I think I found that like the idea of a power law and 80-20 type principles are actually really applicable, where 80% of the outcomes that we've had with Ethena have always come from just like small focused, small decisions that basically really move the needle. And I think that it's something that you learn quite quickly, where rather than trying to please 100 people or have 100 different BD discussions or whatever it is, it's always going to be a small handful that like really drive the outcome of what you're doing. And so I think it's something that we just learned from the beginning, which is try to be very focused on like who are those people that are really going to move the needle, and then making sure that goes well, and then sort of treating the rest as noise so they can really just focus in on those small pieces that will be consequential. Yeah.
Yeah, I agree with that. I think the car behind you also agree with that. Awesome. Well, Guy, thank you so much for coming on today. It was an absolute pleasure.
Yeah, I appreciate having me on. Okay.